What if I told you the biggest mistake new investors make isn't choosing the wrong stock? It's waiting too long to start. Every year, millions of people promise themselves they'll begin investing, but fear, confusion, and endless advice on the internet keep them on the sidelines. Meanwhile, those who start early, even with small amounts, give their money more time to grow. In 2026, investing has become easier than ever before. You no longer need to be rich. You don't need a finance degree, and you don't need thousands of dollars. In this video, you'll learn the basic investing principles every beginner should understand before risking a single dollar. Let's get started. Many beginners think investing is gambling, but real investing is very different. Gambling depends mostly on luck. Investing is about owning assets that have the potential to grow over time. When you invest, you're putting your money to work instead of letting it sit idle. Different investments include stocks, ETFs, bonds, real estate, index funds. Each comes with different levels of risk and potential reward. The goal isn't to get rich overnight. The goal is to build wealth steadily over many years. One of the greatest advantages any investor can have is time. Imagine two people. One starts investing at age 20. The other waits until age 35. Even if the second person invests more money every month, the first investor often ends up with significantly more wealth because their investments have had more time to grow. This is why many financial experts say time in the market is often more important than trying to perfectly time the market. Starting small today can be far more valuable than waiting for the perfect moment. Every investment carries risk. Anyone promising guaranteed profits should immediately raise a red flag. Generally speaking, higher potential returns usually come with higher risk. That's why diversification is important. Instead of putting all your money into one company or one asset, many investors spread their investments across different sectors and industries. This helps reduce the impact if one investment performs poorly. Remember, protecting your money is just as important as growing it. Many new investors make the same mistakes. Buying investments simply because they're trending. Selling during market crashes. Trying to get rich quickly, following social media influencers without doing research, or investing money they can't afford to lose. Successful investors usually avoid emotional decisions. They focus on long-term goals instead of daily price movements. Patience is often one of the most valuable investing skills. Here's where investing becomes truly powerful. Money can earn returns. Then, those returns can begin earning returns of their own. Over many years, this compounding effect can dramatically increase your wealth. Even modest investments made consistently can grow into surprisingly large amounts over time. The earlier you begin, the longer compounding has to work for you. You don't need dozens of investments. Many successful investors follow a simple plan. Invest regularly, stay diversified, keep costs low, continue learning, avoid emotional decisions, and remain patient. Consistency often beats complexity. Small, disciplined actions repeated over many years can outperform risky short-term strategies.
Today's investors have access to tools that previous generations never had. Investment apps, fractional shares, low-cost index funds, AI-powered research tools, educational resources available online. But technology alone doesn't create wealth. Good financial habits do. The investors who succeed in 2026 won't necessarily be the smartest. They'll be the ones who stay disciplined, keep learning, and think long-term. Investing isn't about becoming rich overnight. It's about making smart decisions consistently. The best time to start investing may have been years ago. The second best time is today. Your future wealth depends on the financial decisions you make now. If you enjoyed this video, subscribe for more finance, investing, and wealth building content. And let us know in the comments, if you were starting from zero today, what would be your very first investment?